Mr. Edward, good seeing you again after probably 1 year, right?
Yes, almost. It's good to see you again, Eric.
Good. So I'll go straight into, for our audience who don't understand European investment banks operations into the region, maybe you could give a brief intro about yourself and, what EIB does in the region and specifically Kenya.
Sure. So my name is Edward Claessen. I'm the head of the EIB's regional hub for East Africa. I'm based here in Nairobi, and I arrived here in early 2023. Before I came here, I spent almost 20 years investing in the private sector in Europe, but also globally. The EIB has its regional headquarters here in Nairobi, from where we cover 11 countries in East Africa. We support both the public sector and the private sector. And to give you an idea, in Kenya, we've been investing since 1977, around $1.8 billion in more than 70 projects.
Okay, good. Speaking of the private sector, Africa's PE and generally even the PE industry, has been rising significantly. But however, when you compare that to a global level, we are still probably less than 1% of the activity globally. Having been a big key player in that sector, what are you seeing? Why is that the case?
It's true that there's a lack of capital in Africa, certainly a lack of private capital. I think that the reasons are manifold, but some of the issues are that Africa is still not, let's say, one market. It's a fragmented market, and I sometimes hear that it's easier to sell your product to Europe from here than it is to sell to a neighboring country. Or traveling across the region is also not always as efficient as it can be. So I think these are aspects that contribute to the lack of investment and the lack of availability of capital. Other things to note are in certain instances there is not maybe political stability or the stability of regulations and government policy. So I think those are all areas that contribute to maybe receiving less capital than Africa should. And I'd like to add that I think it's a shame because there's a lot of opportunity, and by lack of capital, these opportunities are not captured upon. And that's a shame for Africa.
No, we were speaking about the challenges and what has changed since 1970s when you guys previously started investing into the region. When you speak of, say, risk around political instability, don't you think our governments are now more stable, economies are more stable, and it's even easier to predict what's going to happen?
Yes, no, certainly things have improved, but the rest of the world is also not standing still. So in terms of infrastructure development, Africa is still to some extent lagging behind. So and the venture capital market here, for example, is quite nascent, right? Our first investments were done in the late 90s, whereas elsewhere in the world it started a lot earlier. So Africa is catching up, but there's still ground to be covered.
Okay. Speaking of the role of private capital, even just in driving things like innovation and startups, what role do you guys play as CIB locally in terms of supporting the startups? Do you do direct investments into companies, or do you do investments into funds? I will assume.
So we do both, but when we're talking about startups and SMEs, it is clear that it is not easy for those companies to raise debt financing. The local banks are quite conservative, and very often startups and SMEs do not have the balance sheet or the profitability to get debt financing. So this is where you need equity. You need to come in with equity, and we do this through funds. We don't do equity investments directly. It's not feasible for us having a small team. So we invest in private equity funds that then invest into portfolio companies and investee companies here. We select hopefully the best fund managers that have a clear investment strategy and the opportunity to create positive financial returns. And we aim to be catalytic by coming into these funds early. We've been investing 30 years now in the continent. We've got a lot of experience. We've invested 3.8 billion euros into 178 private equity funds. So when we now make a commitment to a new fund, it sends a bit of a signal, you could say a seal of approval, that we've invested in it, and that then brings other both private and public sector investors across the bridge to also support these funds. So this is one way for us to be catalytic and attract more capital into SME and startup financing in Africa.
Okay. Speaking of SMEs, I know you guys participate, and of course, again, not directly, but through banks, for example. Could you just explain the nature of that involvement with local financial institutions?
Indeed. So we are a big financier of the local banks. We have recently signed a large loan with Family Bank, and shortly before that with the KCB. The way this works is we provide financing to these banks, who are then able to on-lend on favorable terms or in certain sectors that we would like them to support, to SMEs and to younger companies. So this is debt financing. It's slightly different because, of course, these companies already have some revenues and are profitable or have collateral.
Okay, speaking of debt financing, that's a topic closer to my heart. I've been following what's happening locally, especially, on private placement type of instruments. Think of CPs, for example. And what I've noticed is a lot of local businesses are keen, probably go to banks to get financing, but given our TDS and the requirements around things like collateral, and these are companies actually doing very well. Now they opt to use instruments like invoice discounting, those type of instruments to raise short-term sort of debt capital in terms of commercial papers, as an example. Now when you mix that with, say, capital markets, do you guys participate in that? Is that something of interest, or it has to have a mix or a placement in a capital market type of institution?
I mean, we are not a local bank. We're the European Union Bank. So we leave the local banks to do the local business. We don't want to be seen as a competitor to the banks that we support. So as I just mentioned, we work with the likes of KCB, Family Bank, Equity Bank, and many others. The products that they support and they bring into the market, it's really for them to decide.
Going back to the earlier question, what sort of lessons do you think Africa or as a continent we can learn from the earlier, especially in Europe, earlier when they all start at the infancy stage, and what's happening at the moment?
Well, I think the big difference between Europe and Africa, one of the, maybe in my observation, is that Europe is one market, 27 countries, most of them have the same currency. It is very beneficial for the economy and certainly for private equity and venture capital to have a big playground. Most countries have quite stable regulations, favorable policies towards venture capital, and also for trade. And this is something where I think Africa can improve. Having more investors want stability and they want predictability for the long term. So having long-term stable government regulations and policies, let's say predictability on taxation, these are helpful things where I think improvements can still be done here.
Okay, good. Most recently, EIB launched the Boost program, ideally to unlock private credit or capital for investors. Maybe could you just explain to our audience what Boost intends to achieve?
Sure, with pleasure. So Boost Africa is an initiative from the European Investment Bank together with the African Development Bank, and it is supported by the European Commission. It aims to support entrepreneurship and innovation in Africa. And we do this by providing venture capital as well as grant money for technical assistance to both to fund managers as well as to entrepreneurs. So this is the background behind Boost Africa. Okay.
Could you maybe just give a bit of the examples that of you guys have supported through that particular program?
Yeah. Mm-hmm. So we started late 2020. We've now fully invested 78 million euros into 6 venture capital funds across the continent. 73 companies have already benefited from this program, and we expect this to grow to well over 100 companies. So it's working. It's fully committed, and we see very positive results. I can give you some examples of a few companies that we've supported. So, for example, one of the companies that have received financing is POA Internet, and POA Internet is building infrastructure, connectivity infrastructure, internet connectivity into areas where so far there was no connectivity. And this is really changing the lives of people. So people who could before not connect to the internet now have the infrastructure, have an affordable plan, and are able to generate income from their mobile phone or through their connections. Another example is Shamba Pride. Shamba Pride is connecting smallholder farmers across Kenya. More than 80,000 are now connected to one platform. And the benefit for them is they are able to get inputs like seeds and fertilizer at better rates, but they're also able to sell their produce at better rates because there are more buyers connected. So very beneficial for them. It has also created 4,000 agro dealers, kind of new jobs who are now providing these services and dealing with them. So this is a very impactful company into the agricultural sector. And finally, maybe Turaco Insurance. Turaco Insurance provides insurance for people. So if their mobile phone gets lost or broken, they get a new one. Many people in Kenya these days, that's their connectivity to generate income to their banks. So a mobile phone is almost like your livelihood. And having insurance, before most people in Kenya were not insured, and it was not available and not affordable. So this provides them an opportunity to, for a small amount each month, basically guarantee their income in a way.
Okay, interesting. You mentioned that particular fund has already been allocated, and the companies you mentioned are ideally tech-enabled businesses. Do you consider other sectors, or which sectors are you considering, or you see as greatest potential, for greater returns?
Interesting. In general, I would like to say that we're to some extent sector agnostic. There are opportunities in many different sectors. But yeah, if you have to name a few sectors that I think show particular promise, also here in Kenya, it is the connectivity sector, digital connectivity. It is very important for people to be connected these days as a way to generate income. Climate solutions. I mean, climate change is real, and here in Kenya we've seen already significant impacts recently with droughts and floods, and so investment companies that are able to provide solutions into climate opportunities, I think, would be an area where I see very much potential. The fintech sector has been already very active here as well. So those are some of the sectors I definitely see potential. But I think there are opportunities everywhere.
Okay. Speaking of the support for fund managers, do you work with fund managers, from end to end, from allocation and identifying the opportunities, or you just allocate and let them do their thing?
It's a little bit in between. It's not. I mean, it takes quite some time for us to commit to a fund. We really get to know them very well. We check their pipeline. We really discuss with them their investment strategy. But once we've made a commitment, we do believe that it's up to the fund manager to decide on the individual investment decisions they take. We will set the parameters. We will agree a contract with them within which sectors and what type of companies. But it's up to them to decide. I don't think it should be us, sitting far away to some extent to take those decisions. It's the people in the market that know best where the opportunities are. So it's somewhere in between, I would say. We know them very well. And we will take, let's say, a seat on a supervisory committee or something similar, an LP committee, if you will. But we don't take the investment decisions.
Okay. Interesting. Maybe there's a bit of it which is you might have noticed around the trajectory around private sector, especially the VC side, was a bit higher. However, around 2022, there was a slump. Have you started to see that coming back, or is it still the same case?
I've been in the sector for more than 20 years now, so ups and downs come and go. Indeed, let's say end of COVID was again a slump. It's taking time to recover. I think we see improvements, but it's slow. I think venture capital is a long-term business, and funds run for 10 years or longer in general. So short-term slumps, I think you need to be able to cope with them, and you need to almost take that into account when you raise a fund or when you manage a fund, that you'll go through ups and downs as the life of the fund continues.
Okay. While you in the life cycle of a business, especially in Africa, we rarely see involvement of especially the government side. In your view, having with your experience, how do you think governments, private investors, and I would ideally call them the DFIs or development sector players, can help to work together to support this important ecosystem?
I think we all have a role to play. Governments, I think, can and should set good regulations and good policies for business development, and ideally also for private equity. So this is where the governments come in. But and I think there's more to be done in many African countries. I think that there's also a role for the local private sector. There are big companies in Africa, in Kenya, insurance companies, pension funds, other institutional companies that are currently not investing enough in the private sector, be it due to regulation issues or policy issues or what have you. So I think there, both the government here and the local companies, I think, should engage more with the private sector and should invest more in the private sector. And we as DFIs, we can help, we can advise, we can show them our experience. But I think at the end of the day, this is something that needs to happen locally, and it should not be us, let's say, deciding or steering too much. This is something I think the Kenyan and the African countries have to do themselves.
Okay, interesting. From where you sit, where do you see the future of this sector, especially in Kenya and the entire continent?
I see a lot of potential. I think if there would be more capital available, there would be many more startups being launched. Kenya and Africa has a very young population, and specifically here, well-educated, tech-savvy, and entrepreneurial. So if you give them the opportunity with more capital, you'll see many more companies being set up. They will not all be successful, but many of them will. And I think what would be very interesting to see is that these companies will grow, create revenues, employ other people. So in a way, it's a virtuous circle, because that would actually help the government as well. Bigger companies, more employees would mean more tax revenues. So I think it's sometimes, I think it would be great if the government could enable the private sector and specifically the venture capital sector more.
Okay, good. As we come to the end, I have a few questions, which is from both, a business and personal. But in your career at TAB, what has been the boldest investment decision you've supported, and what was the outcome like?
Okay, well, I have to go back into my memory. Well, I would say I've been investing in new fund managers at the start of my career at the EIB, and what I think the best outcome I've seen is that some of these very small young teams are now 20 years later very big fund managers, having a real transformative impact in their economies and growing companies and really making a positive impact on the economy. So that's sometimes something to be proud of for me, but of course it's also fair to say that not all investment decisions turn out the way you like.
Okay, interesting. From an African perspective, how would you describe a smart investment?
A smart investment, I think. In Africa, I think things are, from my point of view, maybe what sets Africa apart is that I think an SME and a startup has to really be able to cope with sometimes with shocks, with external shocks and changes in the market conditions. So a startup has to be adaptable and be able to deal with them. But maybe even more importantly in Africa, one of the issues here is still how to exit your business. Mm-hmm. So I think it's how to sell your stake in a business if you're an investor. So making a smart investment, I think, means that already before you invest, to think about seriously how in 5 or 10 years' time will I sell my stake? Or if you're an entrepreneur, how will I sell my business? Because exiting a business in Africa is not easy. So that I think really is part of being making a smart investment.
Okay, it's quite interesting that a lot of, especially young founders, never think of an exit before. So my key question has always been: do you think of an exit from day one? Is it along the way, or is it that you build a great business and investors or whatever needs to buy looks for you? And which is back to maybe another question, which is, what sort of advice will you give a young founder in Africa who is looking to raise funding, ideally from global type of investors?
I mean, on the question of what is a smart investment, and in terms of exits, there's probably a bit of a difference. As an entrepreneur, you might want to say, I'm going to run this business for my life. So maybe, or during a long time. So maybe the entrepreneur itself doesn't necessarily have to think about an exit. But as an investor, you'll have to exit because your fund will have a 10-year term in general. Mm-hmm. So an investor should think about it before he invests. How will I sell my stakes? Will I sell it back to the entrepreneur? Or will there be somebody else? As an entrepreneur, I mean, some entrepreneurs do want to sell their business. I mean, some people prefer to build something up and then sell it. They don't want to run it. So they should think about it as well. But maybe long-term entrepreneurs who want to build a business and run it, for them it's maybe less important. When it comes to what should entrepreneurs do to raise money from external investors, that was the second part of your question. Mm-hmm. I think it's, build a team around you. Because an investor is not investing in an individual. You have to build a team. You have to have people around you that are competent, that you trust, and that you can build and grow a company together. I think that would give a lot of confidence to an investor.
Okay. Assuming a startup founder came to you and asked you, you asked him the question around exit. One tells you, hey, my exit plan is I'll sell, say, at Series A, whatever, Series B, C, D, or whatever, or to another so that you cash out. Another one comes to you, tells you, hey, my final goal is an IPO. Where will you put your money personally?
Well, I think there's many other aspects that would impact that decision, but I would in general say the longer term the entrepreneur wants to be with the business and grow the business, mm-hmm. I would probably prefer that one. So in this case, it would probably be the person that says, I'm going to go for an IPO. It won't actually be easy to sell in Series B or C at all. But anyway, so the longer term commitment of the entrepreneur, I think the more confidence it gives to the belief that person has in the business.
Okay, interesting. Now to more personal questions. When you first started your career, where did you spend your first paycheck on?
My first paycheck. I don't think it was that big, so I think most of it went to paying the rent and essential things to live. But I think my first savings, I'd like to spend it on sports and traveling, which are my passions.
Okay. Or sports, which sports?
And back in the day, tennis and kite surfing.
Okay, interesting. What's the best investment decision you've ever made in yourself?
The best investment decision is that I think my first job was in Qatar, and having lived all my life in Holland, it basically being exposed to a new culture, new way of working, was on the one hand a big shock, and it wasn't easy. On the other hand, I learned a lot from that, mm-hmm. and then following on from that, I did an MBA in Spain, and I think those two decisions I took have helped me develop and really learn a lot about the world and what I want to do.
Interesting. Which basically is saying the best decision is investing in yourself.
Very true.
Yeah,
I think so.
Interesting. On to the final one. What career advice will you give to someone who is looking to go into your space of, investment banking?
Well, I think the world has changed, and whereas maybe when I was younger, you studied and you were done. I think these days you really have to keep developing yourself and develop new skills. That would be one thing. And maybe another piece of advice would be, which is not so often taught in school, the world very much revolves around networks and who you know. And invest in a good network and make sure you have people around you that you trust and that can help you and that you can help as well. So a good network of trustworthy people around you would be one of the recommendations I have.
Interesting. Thank you for making time, Edward.
Karibu.
This was very insightful.